Mr. Thiam, Credit Suisse reported a profit of 41 million Swiss francs and higher revenues in the third quarter. What were the key drivers?
Mr. Owen, thank you again for seeing us this morning. Our key drivers were really the performance of our divisions. Each of the 5 divisions was actually profitable this quarter, which is really good news. Asia was profitable, and IWM, International Wealth Management, was profitable. The Swiss Universal Bank was profitable, and so were Global Market and IBCM, so a big improvement.
Would you say it is also tough in the beginning of the fourth quarter, or do you see any improvements?
In the third quarter, the environment remained challenging for banks. As you know, the low level of interest rates, the low level of volatility are challenges for our activities. In the fourth quarter, October was an okay month, but the dominant thing is the political uncertainty. It's not a secret that there is a US election next week, followed by an Italian referendum, followed then by a French election, followed then by a German election. So these are 4 G7 countries which have elections in a row, major elections. So it's a source of uncertainty, and it has an impact on the behavior of investors who are standing on the sideline, waiting to see how these events are going to unfold. We will also a bit of volatility attached to the uncertainty around the election results.
How many progress have you achieved regarding restructuring and cost reduction? Are you satisfied?
The cost reduction is a core part of our program. We said that we would reduce headcount by 6,000 this year, and we are at 5,400, so about 90% of the target, and we're confident that we're going to hit the target. But more importantly, we are also reducing the non-compensation expenses. They are down by 12% year on year, which is really a big progress in 1 year. So that program is very much on track. We said that we would take the cost from 21.2 billion Swiss franc at the end of last year to 19.8, so a decrease of 1.4 billion in 1 year, which is really, I think, in the industry quite high. And we are confident that we will exceed that target.
Have there been improvement regarding capitalization of Credit Suisse, and do you see another capital raise as necessary?
Capital is very important for us. We are a bank. In the end, it's a business of trust based on trust. And to be trusted, we have to have a strong capital base. So from the start here, I've had a program of strengthening the capital base. First, we raised some capital last year, at the end of last year, but also a lot of the cost cutting, that's not always clear, but a lot of the cost cutting we are doing is part of a strategy to strengthen the capital. Because if the cost base is lower, you are actually more profitable. You end up having quarters like this one, which are profitable, and slowly you can build your capital base. So we have had a big movement. We measure in banking the capital by the CET1 ratio. We started at 10.2%, which was very low in the industry. We're now at 12%. In 1 year, that's a big progression. The other big measure of capital is the leverage ratio. It was 2.8% a year ago. It's now 3.4%, which is also a big improvement in 1 year. And we are continuing to drive that capital improvement. And you have to note that this is after taking a provision of 357 million. So if we hadn't taken that provision, the capital position would be above 12%.
A couple of weeks ago, you mentioned a possible cooperation to bring down the costs for the banking IT infrastructure. Is there something more precise already?
Well, it's as I said earlier, cutting costs, increasing our efficiency is a core part of our strategy, and we look at many options to do that. For instance, we have a big effort in robotics to automate a lot of the functions in the back office. We have many initiatives. So this is just one idea among others, and it's the idea. It's not a new idea. It's to work with other banks in parts of a business where we don't compete. For instance, if we have 2 identical computer machines and each one is used at 40%, it's not a bad idea to eliminate one of the machines and share that capacity. It's just computing capacity. There's absolutely nothing secret or sensitive about that. It generates a saving that can ultimately benefit the customer, the client, and is good for each of the institutions. So ideas like that potentially are interesting. So we are having conversations, but it's very early days. As you know, in business, between a conversation and an actual result, there is a long path. So it's early days, and if and when there is something to announce, we'll definitely let you know.
But is it true that UBS would be your preferred partner?
I will not comment on who we may be talking to, but you understand if we want to keep that confidential.
In July, you said the share price is a larger reflection of the environment. Credit Suisse stock price has recovered a little bit from the lowest fall in 2016. Would you say that there has been recently a recovery for investor confidence regarding Credit Suisse?
Well, look, we believe that our top investors support the strategy, understand the strategy, and effectively the share price today we think is an opportunity to invest, because we don't think it reflects the value of a company. There is still plenty of upside.